The US housing market just dropped, and this new report shows that we are at a 30-year low. So that means that the housing market is worse than we've seen in 2008 in the housing crash. Look, this isn't just a giant, big clickbaity headline. This is actual data that we're going to dive in here to today to tell you guys that, hey, the housing market, some of what we are seeing are at 30-year lows, which is actually incredible when you think of where we are in this overall economy. So let's dive in to the overall numbers that we saw that dropped today on the NHB or Wells Fargo Housing Index. Now, present sales of new single family homes, expected sales, and the traffics. So some of the key findings that the current sales conditions fell 1 point to 35. Sales expectations in the next 6 months held steady at 43. And traffic of prospective buyers posted a 2 point gain, but remains at a very low level. Now, what is the exact thing that we are seeing is that housing purchase applications have slid the lowest since 1995. So high borrowing costs continue to take a toll on the housing markets. And yes, you saw it right here, right, folks? That 1995, last I checked, that is before 2008. So seeing all that and seeing the 30-year fixed mortgage being at this 7.2% caused these housing purchase applications to slide so drastically, the lowest levels that we've seen since 95. Now, because the pending home sales have been dropping, and if you guys have been following this channel, you know I've been following the housing market very closely and just anecdotally, so you guys know I do have some skin in the game. I do have some Airbnb properties here in the Florida area, and to be honest, they aren't doing very well this summer. Normally, the summer is a slow time for Florida, but I don't think I've ever seen anything this slow. And I think that it's a accumulation of not only the housing market just being down, I think, the overall economy. People just have less expendable cash. And with that less expendable cash, you're not looking to go buy a new house. With that less expendable cash, you're not looking to go on vacation, buy or go on any Airbnbs, all of these different factors. But regardless, the pending home sales dropping in June as buyers struggle with this affordability, it's startling to say the least, because pending home sales are dropping, dimming hopes of a summer surge, and affordability concerns are continuing to sideline those buyers. Now, the pending home sales index based on signed contracts for existing homes has dropped to zero point 0.8 in May, and now we saw it to the lowest it's been in 30 years. And so this is an article from the other day. Will the housing market crash in 2025? So everybody's been looking at this as a concern, and there's a no, I do not believe the housing market will crash, but that they will see market rebalancing, becoming more accessible. So what does becoming more accessible for the average person mean? Well, it means that the housing prices just need to come down. I mean, to be honest, the average home price right now is over $500,000, and the median home price is at $450,000. So we've got the average and median homes now nearly $500,000 or over. And the average person, let's call it the engineer, the nurse, whatever, has a good steady job. They quite frankly can't afford that because the wages have not kept up with that drastic amount of inflation there. So I'm going to keep on diving into this, but make sure you guys are hitting that like button and telling me in the comments what you guys are feeling about this housing crash that we are potentially seeing. And do you take weight into these 30-year lows? When we're seeing these house purchase applications just going so far down, do these things concern you? If so, I'd love to hear you guys dive into it in the comments. And now, there's been the idea of this massive crash since 2008. And don't get me wrong, folks, I don't think that we are going to see a housing crash like we saw in 2008, where it is going to cause a recession. Quite frankly, if you look at various metrics, some people believe that we might already be in a recession now. that's neither here nor there. What I do think is that a lot of people are waiting on the sidelines to purchase a new home and waiting longer than usual because of where we are seeing interest rates, because of where we saw mortgage rates just a few years ago. People think that those mortgage rates are going to come back. I don't think that it's going to come back to the lows that we saw. I mean, the average home mortgage right now has a mortgage under 4%, and I don't think that we're going to see a lot of mortgages get under that realm anytime soon. But what I do think we're going to see is more of a transition, let's call it, right? Like the home prices, maybe they're not going to go as drastically up. I mean, we saw home prices nearly double. So the forecasters weigh in and they look at, hey, there's an optimistic view, right? A lot of people say when these home prices are going to rise, they will rise by a few percentage points, and there will be a significant recovery in the activity after some quieter years. And that's where they kind of anticipate it. Um, you know, that where we're going to potentially start to see Zillow and all these others. But I think, I just saw a post from a realtor friend here the other day that, you know, Zillow is the Zestimates are, overpricing your homes. The market will tell you that it's 50 grand or 100 grand less than what you are actually thinking it's going to be costing or thinking you're going to be able to get to it according to those Zestimates. Because the correction, the data, it's all not updating as quickly. And that is the positive and the negative of housing, is that just all these transactions move very, very slowly. Now, this housing contract activity is very interesting because these pending home sales have dropped more than expected over the summer. And, you know, they're continuing to slump to these lows and lows and lows. Now, houses under contract are the leading indicator of the health of the housing market. And we did see it spike up in November when, that the election occurred. Everybody was maybe happy, optimistic that we would see some positive signs there. But now we haven't really seen much of a tick up. So it leads you to believe that potentially the consumer is a little concerned with what is going on, and potentially concerned with what we are seeing around the globe, right? I mean, we're seeing the dollar have the worst start that we've seen since 1973, so 50-year lows. And then we're seeing housing market having some of the worst numbers we've seen in 50 or in 30 years. So all of this is a combination of housing and just market uncertainty. So June 25, that 2.8 year over year decline in contract signings and 0.8 drop in the previous month. The pending home sales too to 72 with the baseline of 100. So that means it's 28% below the baseline. Now, here's what, at least the Google's AI believes based on some of this, right? Is that these high mortgage rates, these 30-year fixed rate at 6.84, home prices rose so dramatically during the cerveza sickness. There is still that limited inventory because we did see, the home builders have some drastic breakdowns. And then there's the surging wave of home sale cancellations in 2025. So, all accumulation of that. And, we've seen a weaker than normal job market in previous months. Like we're starting to see this, the revisions come back for May, June, July. All of these time periods are showing for a very weak consumer. Now, All Nighter Hider, the GOAT, is in the chat. He's saying it's a great buyer's market right now, but probably not for long. I've heard October has been forecasting some bad housing, I'm guessing. I think housing will grind sideways like before till inflation rebalances. That's what I tend to think. And I think in certain markets, like I'm in Tampa, we're starting to see this market, I guess, correct in a sense. I grew up in Austin. We've seen the Austin market really start to take a toll and kind of reverse in the other direction. I mean, you got to think, right? When we had housing market where people were coming in and buying cash offers. We had a bunch of people from the Northeast who lived in these homes for quite a while, moved down to the South, buy houses in cash for 100, 200,000 over asking price, and just continue to bid those things up and up and up. I mean, at the end of the day, we're starting to see the correction just come in some of these major moving markets. So I think that it's just, par for the course. It's something that we should expect. And, when the Fed still has 30 days to cut interest rates, there's a lot that can happen. I know we see an 83% chance, according to the CME group here, of cutting interest rates. But, a few days ago, right? 1 week ago, we had 85%. And then we had, a few days ago when I was tracking all of this, if you guys are going to the earlier live streams, we did see this over 95%. And then we also saw the potential of the 375 to 400 interest rate target rate. So potentially a 50 basis point cut. Now, the Dixie, we have had it crawl above that 98 mark, which is positive. So the strength of the dollar is starting to come back a little bit. But, I think that there is some sort of disconnect when it comes to the markets here. I mean, we have the SPY or S&P 500, excuse me, only up 2% in the past month. But of course, we did see this big run up. I mean, I bring this up to you guys all the time. We saw this big run up from the lows in April. And the S&P 500, for all accounts, shouldn't be acting as drastic as we've seen moves like this and nearing all-time highs. I mean, there's no way we should see the S&P 500 at an all-time high when we see the housing market literally have, issues like this, where we're seeing data that you could point to 30 years when we had one of the biggest housing crashes in history. That's right. We had one of the biggest housing crashes in history. It was called, the housing market crash of 2008. We're seeing data worse than that right now. Now, if you guys think I'm being too extreme with all of this, it's the data that's showing all of this, right? It's not just me trying to sensationalize everything, right? It's reading between the numbers. Now, the data becomes more and more manipulated over time. And a big issue is that we've seen, the amount of money printing, 40% in a 2-year period occur. And so when we see those occur, the swings up, the swings down are way more dramatic. McLovin, the GOAT in the chat, maybe people shouldn't see their houses as a piggy bank. Exactly. I mean, a lot of them, the thing with housing, though, is it's just one giant debt market. So it is, at the end of the day, the banks are just throwing money at you in order to, peg it against your house. But we're going to be watching this closely as the housing market hopefully here improves. So all-nighter hider saying not a primary, but buying a fixer and fixing it so it can be lived in by someone who wants to and has to rent. Yeah, I mean, there's always going to be room for investing, right? I mean, at the end of the day, people are going to want it, houses that they could just move in ready. Not very many people want to do work to their house, if we're being honest. But I mean, the rise of these, quote unquote luxury apartments that I don't know if you guys have seen them, but in major cities, these quote unquote luxury apartments have so many different things just kind of falling apart in them. I, for one, am always seeing that going on. So make sure you guys are hitting that subscribe button. Please hit the like button for me. I don't know why, but a lot of you guys come in and keep hitting the dislike button on these videos when I'm trying to bring you guys the news. So help me get to those 300 subscribers. Please, if you don't like the videos, tell me at least why. what if you disagree with me, that's fine. We could disagree, but I would love to hear you guys' comments in the chat about all this. So thank you guys all for coming. I know we got 3 of you guys in here. I appreciate you guys. All Nighter Hider, McLevin always blowing up the chat. And I'll catch you guys all at the next one.